Shawnee, so what price,
I'll shout. I'll let you know. Well, actually, it's open now, huh? Is it open there? 35702.
Okay, what price? Are you watching it?
Yeah, I'm watching. Thanks.
Your broadcast isn't quite getting down to the Ashton Gate website. And you hit morning call.
Okay, morning, guys. All right, let's get started. Okay, globally, stocks were rattled by yet another volatile day on the Japanese markets. Sorry, I'm having headphone issues here. Okay. Hopefully that's better. Okay, so so Japanese stocks managed to make up most of the losses that they made yesterday. The Bank of Japan failed to demonstrate commitment to its massive stimulus plan. I think that's the reason that that they had that massive sell-off yesterday. As European markets opened, a little bit of support came in, and then obviously once jobless claims and retail sales beat in the States, we had that big push higher in the States. Asian markets received a lift after a positive session in the US. It seems to have kept the bears at bay for the moment. We saw how well the resources traded in London and on our market yesterday, especially the diversified miners like Anglo's Billies, and then Rio in the UK, and it's followed in Australia. The resource stocks have been leading the gains as metal prices reverse off recent lows. Corporate action today. Telkom came out with headline earnings per share down 73.2% at 87 cents, below guidance which was 94 cents. The Bloomberg estimate was 167, but still a miss on that guidance. Blended ARPU was down 17.1%, which doesn't necessarily mean anything for the other mobile carriers like MTN or Vodacom, but I believe their Vodacom, their mobile division, their ARPU was quite a lot lower. So we can see if that flows through to MTN or Vodacom. I don't think it will, but something to keep an eye on anyway. Ex-div today, we've got a public holiday on Monday, so these stocks going ex-div today. Roynet 95 cents, Mediclinic 61 cents, and Mr. Price 2 Rand 65. Anglo Gold was cut to sell versus neutral at UBS. Basic Resources raised to overweight by Citi. I'm not sure if they were the ones buying it yesterday, but there was definitely a big buy in the market yesterday. Remgro cut to neutral versus overweight at JP Morgan. And then coming out this morning, we 11 o'clock European CPI, 230 US PPI, 230 US current account balance, net long-term TIC flows at 3, 3:15 is industrial production, and at 5 to 4 University of Michigan confidence. Okay, we're going to start off by having a look at the dollar index. If we zoom out here a little bit, we can see how it's sitting right on sort of 2-year support. I'm not 100% sure how much the market's moving on the dollar euro at the moment. It doesn't seem to be too much of an exact guide at the moment, but you can see it's in oversold territory on the RSI, sitting right on that support line. If we do see a reversal off this level, we could see the dollar going stronger for the medium term. So look at the S&P. If we zoom in a little bit, we had that big reversal day yesterday from a bit of a sell-off. It was in touch and go territory for a while around that 1600 level. It is quite a big level. It reversed off there and ended the day obviously on its highs. If we have a look at the level to the upside, looks like if we can get through around about 1640 or 1636 today, or possibly, for confirmation, we're going to close above 1644 as a resumption of the uptrend. I think if we get a reversal of this level, it could be quite bearish. And then obviously if we break through this this sort of 1598, 1600 level to the downside will be I think will be the catalyst to get this index a lot lower. But so I'm going to watch those two levels, 1636 to the upside and possibly 1644 as a resumption to the uptrend, and sort of a break below 1598 or close below 1598 or 1600 to the downside. Let's have a look at the Aussie. We also had that big reversal yesterday. If we can actually put in a Fibonacci retracement here, it pretty much opened yesterday right on 61.8% retracement. It gapped down sort of 250 points, or it moved down 250 points very quickly, and regained 35,000, and then from there it just pushed the whole day higher, closing at about 35,450. We've now opened, trading at 640. So I think if we want to look for a resumption of the uptrend, I'm not 100% sure how much higher we're going to get in immediately, but I guess 36,000 might be a bit of a if we look at an inflection point, 36,500 from the break of this little double top. We did reach the downside target from the break of this little double top, so I think it's the market could go either way at the moment, and you just got to remain flexible. If we had Anglos, we had that big sort of key reversal yesterday. It had actually broken intraday down from that level that we've been watching. Let's see if we can draw a line in here for you. We've been watching this 216 level. It closed right on it the previous day, and then yesterday it was trading well below it, but managed to get higher again. We're just going to be playing this trend for the moment. The upside of this range, should I say, upside of the range 245, 216 is the level we're watching on the downside. If we can't hold this level and we close below it today or in the next few days, we can expect a continuous downtrend. As we know, we've got a big sort of head and shoulders over the last few years, and with a lower target into the sort of 190. So we've got to continue watching those levels and watch that range. If it breaks below 216, we've got more downside. Otherwise, we could have as much as 20 rand upside here. Billington's has actually formed a bit of a head and shoulders over the short term, with I would say a neckline around the 278 level. We've actually closed below that level the last 2 days in a row, and yesterday we managed to regain it on the general mining buying. I think if we have a look at the trend here, we're looking for a close above sort of 280, 282, possibly 281, to negate that head and shoulders and to push higher again. If we get a reversal off this level, I think it could be a good selling opportunity as a good setup to go substantially lower from here. ShopRite. We had the retailers in general traded unbelievably well yesterday. We can see that massive reversal they had. And I think Joe showed this chart yesterday. Bit precarious with this sort of broad head and shoulders forming. It broke down and actually closed below that level for 2 days in a row. Yesterday we had that massive key reversal, closing higher again. I think if we draw a line, it comes in around 170, 178 that it needs to close above just to negate this pattern. I think, yeah, so it's around about 177, 178 that it needs to close above to get out of trouble. We're going to continue to watch this level. If it drops 168 again, it could be a sell back to 160. And obviously, if it closes below sort of its lows, then it could this head and shoulders could play out. So definitely not out of the woods yet in ShopRite. And then the last one I'll show is Woolies. Woolies finally had an up day after getting absolutely obliterated over the last sort of couple of weeks. Hopefully we get a little more follow through on this one. It obviously has been one of the better performing stocks over the long run, and one that you're a little more comfortable holding. 200-day moving average comes at around 168. Sorry, $68. So I wouldn't say it's unrealistic to see $68 in the short term. And that's all for today, guys. Good luck.
Thanks so much.